Good evening, Bruce here. I owe you guys a crush video. So it doesn't seem to be too popular based on the share count. So a couple things are probably at play. It's actually starting to make money. So I think it's a really good, I've been excited about the whole idea of Yieldmax having bearish funds just in what I see a little further out. I mean, I don't think the markets are going to turn down with aggression till probably after May, but clearly the earning reports, some have been good, some haven't been good. When they get into guidance, it's almost always negative because the consumers just don't have the spending, right? The consumer isn't typically going to spend. The car market's a mess. The electric car market's very competitive. So if it wasn't for Elon himself and some of the heroics that he pulled off, I don't even think Tesla would have bounced. He may ultimately, as I've mentioned before, have a winner with Tesla again, but when something goes up 25x, you know, it really has to consolidate. So let's jump into this. And I had said before that I think this is worth thinking about, owning a crash and owning a Tesla. And just do a sample. Somebody had asked me if I thought it was a good idea, you know, to maybe own both. And I said, yeah, maybe go in. Look, if you've been a long time bull and you're upset that you're losing money in Tesla, but you're trying to look at the gains. I did a video in general. If you haven't seen that, check it out on my videos about total return. Don't lie to yourself. Look at total return, right? So you can have NAV reduction and still make a lot of money in the Yieldmax fund, but it's certainly not ideal, right? Whether you're reinvesting and doing, if you're reinvesting and doing a drip and saying, well, you know, I'm okay, I have more shares cheaper, you know, I mean, you can cost average and do that without a drip, but anyway, let's jump in. So Tesla pulled back today. Let me show you some news if you didn't see that. Where do I have my news? Wouldn't you know it when I want to? Oh, here we go. Okay. So Tesla's stock fell 2% Wednesday after Reuters reported that U.S. prosecutors are reviewing whether the EV maker committed securities or wire fraud by misleading investors about its self-driving capabilities. Citing three people familiar with the matter, Reuters said the Justice Department is examining whether Tesla or Chief Executive Elon Musk suggested that the company's autopilot and full self-driving systems means cars can drive themselves. In other words, fully autonomous. The system assists with steering, braking, and lane changes, but are not fully autonomous. So I don't need to keep reading you. But when you look at it, only fell 2%. I mean, if there was more, and maybe it'll fall more, but enough to make this positive. All right, let's jump into the technicals here. So Tesla, and this is what you want. If you guys are used to looking just like I am, right? The bullish funds, which is every other fund that Yieldmax had. This is the first single stock or multi-stock option income fund based on a bearish outlook. I love it. I mean, this is long overdue. There's a lot of things I'm bearish on. But bearish isn't popular. People don't like to hear it, right? You just want to kick the can down the road and keep on going. But so Tesla pulled back minus 1.74. Well, that's what we want to happen, right? So we want to match it on the upside, what it pulled back on the downside. That would be ideal. But we went up 1.28, right? So that's not an anomaly. That's the plan. I'll explain more when we get into synthetics and something unique they do on the calls. I want to explain it a little bit better, or what we call the weeklies, right? The active short term, but even then there's a uniqueness. So no new shares were owned, right? So when you look at cash, there really isn't much change. It's all sitting out there in the treasuries for the most part. And here we are going, a week into the fund. So we had sold some, this should be, oh no, sorry. We had sold a 175, or we probably bought that. Let me look over at my weeklies. Yeah, so on the weeklies, we buy puts. And an interesting scenario, right? So we buy puts with the idea that Tesla goes down and we make some money on the put. Normally we would sell calls, right? But in this case we're selling a put. And the unique thing here is they buy what's known as a long-dated call, right? This isn't part of the synthetic. This is just the weeklies, right? So what happens is it's like a protection, because when you sell a put, in theory, there's an unlimited, right? You sold a put because you think that the stock is gonna go down. Well, hang on, let me just make sure everybody does this. Let me make sure I got this right. So let's go back to our May sheet, and let me look at holdings for just a second, because these confuse you when you've done the other ones for so long, right? So this is a 175 put, and we sold it, okay, because we have a negative here. When we bought this call, these are the two trades that aren't part of the synthetic. So why don't I do the synthetic and then I'll go teach these. So normally if you did your synthetic, you buy a call and you sell a put when you're doing bullish. So that gets reversed here, right? They sell the call and they buy the put. But when you go into weeklies, you do different things. So we'll just stick to synthetic first. So the synthetic gets flipped, okay? That's why you have a minus here. So we're selling this call that we normally buy. If you buy a call, you're bullish, you want it to go up. We want it to drop down below on the synthetic. We have all the way out to, so these turn positive, by the way. I'll take you through the whole synthetic. So here I'm over at holdings, and then I'll go show you on the synthetic sheet, but I'm using this right now. So we did 135 contracts. So on the put, all right, since we sold the call, we buy the put. When you buy a put, you're betting bearish, right? Buy is bearish, sell is bearish. So on the calls we sell, and on the puts we buy. So when we look at these holdings, what I did here, and I've been doing this in some of my funds, is I keep track of the last 3 days, right? So on the close of May 8th, we're now positive in our synthetic. When you add these two numbers, you want a positive number, right? So you want in this case, you want your call to just shrink down to nothing, right? You want to be below it, going to 719, and then it's just going to go away and have no value, right? You want it to be below 180. And you want this, the more it drops, the more money this thing goes up. If it were to go down to 150, this would be 30, right? So you'd have 30 times 135 times 100, because each contract's 100 shares. So that's kind of, it's similar but the exact opposite on the synthetic. And then we'll talk about we've always referred to these as weeklies, active weeklies, you know, the current calls that aren't paired in a synthetic. But in this case, it's a put instead of a call, and then it's another call that gets bought to sort of protect that unlimited put that could really hurt us, right? So I'll go into that one. And this is where we collect, typically I'd say all short time, but this is the only weekly guy that's going to go off the board because it's a 510. This is a long dated protection call that works with these synthetics. Okay, but this is most of the means of making weekly money. Now we could roll this if it gets down to, you know, no value. But we're doing good because if you look at the chart, let's go over the weekly. I put the chart on here and updated. Other than this high volume on you know, Elon Musk flew to China. All of you that know anything about Tesla, you know, the earnings were mediocre, nothing great. But he said, oh, I've got a new cheaper model coming. That's going to solve the lack of sales. Oh, and autonomous driving is going to be fully ready in August. And, you know, it won't be. And, you know, a lot of issues. Now, I'm not saying which way. The chart doesn't tell me which way it's going. It's been trading in this channel. Okay, it started to break down out of the channel, reverse back in, and this kind of went up, and instead of coming back to retest, which many breakouts do, it just fully dropped back in the channel. So it's been staying in this channel, and it could end up, if the bearish wins out, there's a double bottom when you show greater than a year at 100. I could easily see this getting back to 100. If it breaks this, you know, 140, it may be 130 as you extend out. Conversely, you know, if he can pull off some more magic, maybe it will. But based on what I see with consumer spending and a lot of negativity around electric cars at the moment, even though the governments are pushing them, people are favoring, and most of the manufacturers are losing money. And they've been going toward hybrid. So we'll see. So I think, again, in my humble opinion, I might go in and own both of these. And then when I see what the trend is, which way it moves, close out one side. And it'll give you a little experience with getting some income, right? Because right now it's sitting at about the midpoint of this channel. So much for that, right? So this weekly put, let me look at it again. So normally, if this was a bullish bet, they would be selling calls, okay? So since this is a bearish, they are selling puts, okay? And they want it to drop down below 175 on a weekly basis. Well, interesting, right? So what we did in May is we sold this 175, right? And we collected 202. So for 27,270, we need it to be 175 or below. Well, it turns out today we went to 174. So it's dropped the value. So we're much closer. Let's see, 27,270 is what we paid. And right now in holdings, they're showing 32. Now, I don't know. I should pull up. Well, I'll fix it if it's wrong on the holdings. Hang on a second. Let me open that for you guys because I think it's important. going to be able to find it without moving some things around. I updated these. So let me explain this. Okay, so I'll get you an update. This should be 187 down from 202, but I have a feeling it's lower. I'll fix that. Okay, but the idea, and I'll show you in the scenario where we should win this if we will win this if we stay below. What this particular trade is, very small amount of money. I think they went out and spent, what was the amount in May? 14 cents, right, to put this trade on. And what it is you go all the way out to 719 and you take a 180 call, and a 265 call. What they're really trying to do, this thing doesn't even come into play unless Tesla just magically by 719 ran all the way up to 265, then you would be killed from 180 puts all the way up to 265. So you'd lose $85 a share times 100 times 135. So what they want to do is they buy a call out here dated 719. So then if it ran to 280, they would make $15 on a call that they spent 14 cents times 135 times 100. So it's like a protective call without spending a lot of money to help you not get murdered. You'd get hurt bad, but you wouldn't be killed, so to speak. So it's only 1,800. You don't expect to get anything back for that. You just expect it to expire worthless, but it is a protective call. So they went long, and it's unique. It's because of this bearish bent to the whole situation. All right, let me wrap up for you guys. Let's go over to in holdings. There's probably one more thing. So we're now trading at 265. So when you add up all the assets and the close price, they're in sync. What's interesting is still 125,000 shares, right? So again, I think people need to figure out that this is an opportunity for income and a balance if you're nervous. I know some of you play puts and calls. You know, there's TSLA, I think, for going long, and there's a short. But, you know, this gives you sort of an income fund to offset where your income fund long. So I'd be interested to see how many more people flow into this. It's a little bit hard for us to teach because we're so used to going the other way. And I have 35 years of option experience, and I have to just slow down and catch myself, right? But we're making money on the synthetic. If we had to close that out right now, we have a $45,000 gain. So on our payment tab and our short call income, right? That's at 175. So we make all that money, which is 20 cents a share, okay, if we close at 175 or below. And the synthetic is where we sold that initial opening volley, right, on the 180. Because what we do is we sell the call and we buy the put. So actually that one might be a negative. I might need to change that. But in our situation, we're doing good. All right, so looking at that, we're either offset one another or we have a total income of 56. This clearly is what we're going to make. So I'll make sure I get this updated correctly and hope that helps, guys. All right, this is Bruce saying good evening. Again, this is not financial advice. Check with your financial advisor. This is for fun and education. Okay, see ya. Bye.